Thursday, April 8th, 2025.
Yeah.
Welcome back to the FinWell Daily Brief.
Back again.
Yeah. And this is, can you believe it, our 16th briefing already.
16?
Wow. So we've covered some ground together, I think, haven't we?
Yeah, absolutely. Covered a lot of interesting stuff.
So today we're doing what we always do, looking at the financial landscape as it is after today's market close at 3:03 p.m. India Standard Time.
Right.
And there's been a lot of news across all the platforms. So we're going to jump right into what's moved those markets.
Okay.
And more importantly, what it means for you as you kind of navigate these currents.
Right. So like always, we break it down and see what's really impacting people and then what they can actually do about it.
Exactly. That's our goal here.
Yeah.
So today's actually quite interesting, I think, because we're seeing a market that's shown some real resilience after what some analysts were calling a bit of a downturn.
Okay.
We actually saw a significant rebound.
Oh, interesting.
And the Nifty 50 finished strong, up by 1.69%.
Yeah.
But even more than that, the midcaps really charged ahead, with the Nifty Midcap 150 gaining a robust 2.12%.
Wow.
And even the small cap segment showed some impressive momentum, with the Nifty Small Cap 250 closing 2.17% higher.
Okay.
So overall, that positive energy was reflected in the Nifty Total Market Index as well, which rose by a pretty healthy 1.89%.
Yeah.
It really paints a picture, I think, of a market finding its footing, wouldn't you say?
Yeah, definitely. When you see those kinds of gains across the board, it's not just one sector that's driving things.
Exactly. It's broad-based.
It's much broader it is that suggests there's something more fundamental going on.
Exactly. So what we want to do today is really kind of unpack this rebound a little bit.
Okay.
And explore why this happened, especially when we consider the global backdrop.
Right.
We want to understand the context a little bit better, and then we're going to tackle a more domestic issue, which is the government's decision to increase the excise duty on fuel.
Yeah, that's been in the news.
It hasn't. We're going to look at the reasoning behind that and what implications that might have.
Okay.
And then on a brighter note, we're also going to delve into this impressive 25% revenue growth that was reported by Titan Company in their fourth quarter.
Titan doing well?
They are doing very well, and we're going to try and understand what that tells us about the luxury goods market as well.
Interesting.
And then, plus, there's some pretty intriguing buzz going around about a potential move by the RBI.
Oh, okay.
The whispers are getting louder about a possible interest rate cut that might be larger than initially expected.
Ah.
And finally, we'll touch upon the ongoing trade discussions between India and the U.S. and their significance for, our economic ties.
Always an important topic.
It is, isn't it? So it's a packed briefing.
Yeah.
But hopefully by the end, you'll have a much clearer picture of what's happening.
I'm sure we will.
So let's kick things off by talking about this market rebound.
Okay.
As we mentioned, it did follow what was being described as a significant downturn. So it wasn't just a continuation of, an upward trend.
Right.
So what do you think were the main catalysts for this turnaround? Was it purely domestic factors, or were there some broader global influences at play as well?
Yeah, that's a really crucial distinction to make. What's so interesting about financial markets is how interconnected they are.
Absolutely.
With the global narrative.
Yes.
So the rebound we witnessed in Indian equities seems to be significantly influenced by, a wave of positive sentiment washing across Asian markets yesterday.
Yes.
And if we dig a little deeper into the why behind that global optimism, a key factor appears to be increasing hopes of easing trade tensions on a larger international scale. So it's not just about India.
Got it.
It's a global phenomenon. Think of it like this: when there's a feeling that, some of that friction in global trade might be reduced, it creates a more positive outlook for businesses and investors across different economies.
Right.
And India, being such a significant player in the global arena,
Absolutely.
naturally feels that uplift.
Yeah. It's like a collective sigh of relief, isn't it?
Exactly.
In the global economy. And it translates to positive action here.
Exactly.
Now, let's talk about something that's a little closer to home, which is the government's decision to hike the excise duty on petrol and diesel by euro per liter each.
Right.
So what's the thinking behind this move?
Well,
And what should people be aware of in terms of its potential impact?
yeah, I think if we look at this from the government's fiscal perspective, the timing of this hike is quite strategic.
Okay.
With global oil prices having seen a recent dip, it presents an opportunity
Right.
for them to increase their revenue stream
Uh,
through these excise duties without necessarily leading to, a sharp increase in what consumers pay at the pump immediately.
Okay.
So it's all about kind of bolstering the fiscal revenues.
So taking advantage of the situation.
Yeah, essentially they're trying to capitalize on lower international prices to strengthen their financial position.
Right. So it's a way for them to kind of shore up their finances while they have a bit of breathing room.
Yeah.
Because of lower global oil prices.
Exactly.
But what about the potential kind of ripple effects down the line?
Yeah.
I'm thinking particularly, about the impact on inflation. Could this move eventually lead to higher prices for everyday goods and services?
Yeah, that's a very pertinent point. While the immediate pain at the pump might be cushioned by those lower baseline oil prices, an increase in excise duty does inherently add to the underlying cost of fuel.
Yeah.
And as we all know, fuel is a key input for so many sectors. Transportation, agriculture, manufacturing.
It affects everything.
Everything, yeah.
Right.
So even a seemingly small increase can have that cascading effect, potentially contributing to inflationary pressures over time.
Yeah.
So it might not be an immediate spike,
Right.
but it's definitely something to monitor.
In the broader context.
In the broader context of price stability.
And how it affects what we can actually buy.
And its impact on consumer spending power, exactly.
Absolutely. It's all a delicate balancing act, isn't it?
Yeah, for sure.
Now let's switch gears a little bit and talk about some positive news on the corporate front.
Okay.
Titan Company reported a really impressive 25% jump in their revenue for the fourth quarter.
Yeah, I saw that.
That's a significant number.
Huge.
So what do you think were the key factors driving this robust growth?
What's really noteworthy about Titan's performance is that it's not just one thing.
Okay.
It's the synergy between a couple of key factors.
Right.
So the report specifically highlights surging gold prices and sustained consumer demand for jewelry as the primary engines of this growth.
So both of those things working together.
Exactly.
Now, gold, as we know, often tends to attract investors during times of economic uncertainty.
Right, a safe haven.
Yeah, and driving its price upwards.
Mm-hmm.
But equally important is the fact that despite these higher prices, consumers continue to show a strong appetite for purchasing jewelry.
Yeah, that's interesting.
So it suggests a degree of resilience in consumer sentiment, particularly within that jewelry and luxury goods segment.
Yeah, it seems like people are still willing to spend on things that they see as valuable and that will hold their value.
Right. It's not just the increased value of the gold that they have in their inventory.
Right.
People are actually out there buying more jewelry.
Yeah.
Which is a really good indicator. And the report even touches upon this, framing it as a sign of resilience in the jewelry and luxury goods market, and even suggesting that it could be seen as a defensive investment avenue.
Interesting.
So can you elaborate on that idea a little bit?
Sure.
How can jewelry be considered a defensive investment?
The concept of certain luxury goods, especially, precious items like jewelry made from gold and other valuable materials, acting as a defensive investment avenue, is rooted in their historical tendency to retain or even increase in value during periods of economic instability or uncertainty in other asset classes. So gold in particular has long been considered a safe haven asset, a hedge against inflation and economic downturns. And when a company like Titan demonstrates strong revenue growth, driven by consistent demand for these items, it signals that, this sector might be less susceptible to broader economic headwinds compared to, more discretionary spending categories.
Right.
It's a reflection of the enduring appeal and perceived intrinsic value of such goods.
So it's not just about adornment.
No.
It's also about potentially preserving value as well.
Exactly.
Now let's move on to the realm of monetary policy.
Okay.
There's growing anticipation, I think, around the Reserve Bank of India's upcoming policy meeting.
Right.
And some are suggesting that the potential rate cut might be exceeding the anticipated 25 basis points.
Okay.
That would be a more significant move than initially expected.
Yeah, it would.
So what could be prompting the RBI to consider a larger cut?
I think, if we take a step back and look at the broader global economic landscape, alongside some of the domestic growth considerations, the rationale for a potentially more aggressive rate cut starts to come into focus. Many economies around the world are grappling with various challenges.
Yeah.
And this can have a ripple effect on India's economic prospects as well.
Right.
So a more substantial rate cut from the RBI would send a stronger signal of their commitment to proactively stimulate economic growth and ensure that there's sufficient liquidity support to the financial system.
Okay.
So, it could be seen as a move to provide a more significant boost to economic activity in the face of these global uncertainties.
Right. And it's interesting that the report mentions swap markets, indicating expectations of a more substantial rate cut.
Yeah.
So for those of us who aren't, kind of neck deep in financial jargon.
Right.
Could you briefly explain what swap markets are?
Sure.
And how their activity can give us clues about future interest rate movements?
Yeah, absolutely. Think of swap markets as marketplaces,
Okay.
where financial institutions essentially trade different types of interest rate agreements.
Okay.
So the prices and the volume of trading in these markets often reflect the collective expectations of these institutions about where interest rates are likely to go in the future.
Okay.
So if we see indications from the swap markets that a larger rate cut is anticipated, it suggests that a significant number of major players in the financial system believe this is a probable scenario.
Right. So they're kind of giving us a window into what they're thinking.
Exactly. It's like a real-time market-driven forecast of interest rate trends.
Almost just a peek into the future.
Yeah, exactly.
Okay. So the swap market's essentially giving us a peek into what the big financial players are anticipating from the RBI.
Right.
Now let's shift our focus to international relations.
Okay.
The trade discussions between India and the U.S. are gaining a lot of attention.
Yeah.
With that high-level engagement between U.S. Secretary of State Marco Rubio and our External Affairs Minister S. Jaishankar.
Right.
So what are the key areas of discussion in these talks?
Well, the primary focus of these high-level engagements is centered on addressing the recent tariffs imposed by the U.S. on certain imports from India.
Okay.
And, from the Indian perspective, the key objective is to work towards a more balanced trade relationship.
Yeah. Between the two nations, trade imbalances and the imposition of tariffs can create friction and uncertainty.
Yeah.
And so these dialogues are crucial for fostering a stable and predictable environment that supports healthy bilateral trade flows and investor confidence in the long run.
So really important for both countries.
Yeah, absolutely.
To try and work this out.
Yeah.
So the outcomes of these discussions could have a very tangible impact on the flow of goods and investments between our two countries and really shape the overall economic relationship.
Sure.
Now, as we kind of bring all these different pieces together, the market rebound in fuel prices, tightens growth, potential rate cuts, and these trade talks, it paints a rather complex picture, wouldn't you say?
Yeah, it does. It's definitely a lot to unpack.
Yeah, so what's your overall take on the current market outlook? And what kind of broad investment strategies might be worth considering in this environment?
Yeah, you've hit the nail on the head. It's a complex interplay of domestic policy adjustment and international trade dynamics. So, there's a lot going on.
Yeah.
The tentative optimism we saw reflected in yesterday's equity market rebound is certainly encouraging.
Yeah.
But it's wise to heed the caution about underlying challenges. The recovery of the Nifty 50, while positive, did follow a period of volatility, which reminds us that the market can be sensitive to various factors.
Right. And we can't forget the likely impact of the fuel excise duty hike.
Oh.
Particularly on the energy sector and potentially even broader inflation.
Exactly. Government policies, even seemingly small adjustments, can have significant sectoral consequences.
Absolutely. And the strong performance from Titan in the jewelry and luxury goods sector stands out as a beacon of resilience and growth.
Yeah, for sure.
Within that specific segment, highlighting that there could be pockets of opportunity even amidst broader market uncertainties.
Yeah. Absolutely.
So it's not all doom and gloom.
No, not at all. I think the current level of the 10-year government bond yield, around 6.588%, does indeed signal market anticipations of monetary easing by the RBI. Wow. And the relative stability of the NRI-USD exchange rate at 85.6696 suggests that the market is currently processing global trade developments and capital flows in a relatively stable manner.
So with all of that in mind,
what
would be some key takeaways for our listeners regarding their investment approach right now? What are some broad strokes of strategy that might be prudent?
Yeah, given this multifaceted landscape, a few strategic considerations come to mind.
Okay.
So firstly, diversification across various sectors and asset classes remains a fundamental principle for managing risk.
Makes sense.
Don't put all your eggs in one basket.
Okay.
Secondly, a focus on quality companies that have strong underlying fundamentals, particularly in sectors demonstrating resilience like luxury goods, could be a prudent approach. And thirdly, it's crucial to remain vigilant and closely monitor policy developments, both the RBI's monetary policy decisions and the government's fiscal measures, as these will have a significant influence on market direction.
And they're unpredictable.
They are.
You never know what's going to happen.
Exactly. And finally, Given the ongoing global uncertainties, risk management, especially concerning potential currency fluctuations and the outcomes of international trade negotiations,
Right.
should be a key element of any investment strategy.
So be prepared for anything.
Yeah, essentially.
Okay, so to quickly recap, we've seen the Indian markets bounce back, likely influenced by that global optimism around easing trade tensions.
Right.
The government has increased the fuel excise duty with an eye on bolstering those revenues. Titan Company has reported that strong growth in the luxury goods sector.
Yep.
The RBI is potentially considering a larger than expected interest rate cut, and India and the U.S. are engaged in those crucial trade discussions.
Yeah, and echoing yesterday's concluding thought, it's clear that the Indian financial markets are at a pivotal juncture.
Okay.
Balancing the short-term positive momentum with underlying global and policy-related uncertainties.
So the key for investors right now seems to be staying vigilant, yet opportunity-driven.
Absolutely.
Because it really feels like sectoral shifts, central bank cues, and global developments are going to be the crucial factors to watch in the weeks ahead.
Yeah, I agree.
And when it comes to your portfolio strategy, it's about finding that balance between pursuing growth opportunities with protective hedging and smart diversification.
Exactly. Staying informed and adaptable will be key to navigating these financial currents.
Absolutely. If you found this briefing valuable and you want to stay up to date with the daily financial landscape, make sure you subscribe to the FinWell Daily Brief for more timely market insights.
Right.
And we'd love to continue this conversation with you, so please connect with SOS FinWell on LinkedIn to explore these topics further and share your perspective.
Yeah, come join the community.
Yeah, and don't hesitate to reach out to SOS FinWell on LinkedIn with any specific questions or topics you'd like us to delve into in future briefings.
Right.
We're always looking for ways to make this as informative and relevant for you as possible.
We appreciate your engagement and look forward to hearing from you.
Absolutely. And on that note, we'll leave you with a timeless piece of wisdom from the legendary Warren Buffett.
Okay.
Do not save what is left after spending, but spend what is left after saving.
Words to live by.
Thank you for joining us on the FinWell Daily Brief. We'll catch you in our next briefing.
See you then.
Bye.